We now move on to bank statements. So remember in the beginning, we had this nice little table over here of all the different types of documents we have for receipts and for payments. So just to recap the ones we have done our checks and check counterfoils, we've done our receipts and duplicate receipts, we did our cash register roll, we've done our bank deposit slip, our cash invoices we'll do after this, but they're very quick, and now we are talking about the bank statement. Okay, remember each of these fits into a payment or receipt. Over here we can see a bank statement has a bit of both. Okay, if you're paying bank charges, that's money going out your account. If you're earning interest, that's going into your account. So we are on page 35. So please make sure you're following along. So each month the bank will issue a bank statement. As I said, you probably have seen a bank statement before. You can look at a bank statement on an internet banking app, or you can even see it on your computer. It basically just says all the money that's either gone in or out of your account. Okay, so each month the bank will issue a bank statement to the business indicating all transactions that took place between the bank and the business. Okay, so money coming in, money going out. All money deposited into the bank account will be added on the bank statement, and all money paid out from the bank account will be subtracted from the bank statement. This sounds quite logical, doesn't it? So if you're paying out money, your bank account is decreasing. If you're receiving money, your bank account is increasing. The bank statement will indicate how much money the business has left in the bank account. This is called the balance. Okay, whenever you hear this word balance in accounting, I want you to think of this phrase. It's the money left over. Okay, after adding and subtracting, it's the money left over. Okay, so I don't want to be confused about that. Got an example at the bottom of page 35 where this is what a bank statement would look like. You've got a bunch of things happening here. You've got something called an opening balance. So what that means is it is the money left over from the previous month. Okay, so you can see the month before, so the 5th is April, I think it's May. Yes, it's May, it tells us, yeah. So at the end of April, we had 10,100 Rand. So this is the money we're working with for the beginning of this month. Then we have a deposit that pops on in. Okay, now I'm going to put it over here at the bottom. I've made increases in balances green, and I've made decreases in anything that would decrease the balance in red. Obviously, green means positive, so that's a good thing. Red is not always the best. So what do deposits do? They increase. Okay, we're adding money to our accounts. You can see our accounts has increased. So deposits increase a balance. If we look at a check, remember we said a check is almost the same thing as paying out money. Okay, it's a payment, so I'm making it red. It decreases, so we are reducing our money, so you can see our bank balance decreases at this point. So as of the 24th of May, our bank balance was decreased and it was 11,500. I've put this other thing here, it's in gray. It's not in your book necessarily, but this is another way that your bank account can decrease. Every time you take money out from an ATM machine, so you've all seen an ATM machine, that's called a withdrawal. So you're taking cash money out, that also would feature in the same way as a check. It would also decrease your bank account. Next thing we have are bank charges. So remember we've spoken about bank charges before. Bank charges are, you don't get your checkbook for free. You also, whenever you swipe your debit card, that also isn't free. So every time you're causing the bank work, they will charge you for all the work you make them do. Sometimes they also scam you in a way, because, not scam you, but they will find a way to charge you for a lot of things. So this bank charges will decrease your balance. You can see this is decreased by 500 Rand. So that decreases the bank balance. Okay, lastly, we have interest earned. So if you have a very good balance and you make the bank happy for keeping a good amount of money, that increases your account. So by 100 Rand, and you can see we have 100 Rand added onto our balance. At the end of this month, how much money do we have? 11,100, and we call this thing the closing balance. So that just means the closing balance, so the closing money left over in May is 11,100.